Hello, today is June 25th, 2016. We just had the Brexit event on the 24th. I want to go over market structure, both the daily structure and long-term monthly structure, and show how that provided clarity during the event. You look at the desktop, we've got the British pound, and coming into the session, the pound is in a bull trend acceleration. The market had been digesting, and we had a event in the prior session, and so it broke out to the upside, and we can see on our indicator we moved from the neutral area and had a big positive shift of 6 into the upper extreme. So the market's in a bull trend acceleration. Our expectation is the market's going to maintain aggressive structure. We're going to look for opportunities off the directional and to see that market just continue to scale higher. That's the expectation of a bull trend acceleration. If we get a break in structure, that would be triggered either at the upside pivot or on a failure from the directional. So we have an upside pivot reversal and a sell DIR breakout strategy. Here's the prior session's action. This is the big positive signal that generated the buy breakout, and then we're coming into the new session and the market is opening higher. Now I want to bring in some new monthly structure to show how the monthly and the daily structure can work together. So what you're looking at here, this is a daily chart with the monthly price map structure plotted on it. So this was created on June 1st and it holds throughout the month, and we can see how the market rotated around the R level directional. Here's the upside pivot, the downside pivot, CRX minus, CRX plus. We had that rotational trade within the CR plus, CR minus. Then the market failed, broke out to the downside below the DP, but stabilized off the CRX minus. And immediately we had that a reversal kick in, and we had a breakout above the upside pivot. And coming into the session, the event session, the market had held the CRX plus. Then as we open up during the event, we're opening up above it. The market's in this bull trend acceleration. It should continue to accelerate, so it should continue to hold structure. What I've done here is I've plotted the monthly CRX plus level and the monthly UP on this intraday action, so we can kind of see how both the daily and the monthly structure work together to kind of give trigger to get you involved with this event earlier. So the market comes in, it opens above the daily CRX plus as well as the monthly, so it's bull trend acceleration or accelerated trend. This market should hold positive structure and go. It should hold this metric and just take off. And as we kind of move forward here, we can see the market break down and fail here. So this is the kind of the first tell that there's an issue with this bull trend acceleration, and then we break this price structure along with the monthly CRX plus to give us another break in structure, another tell that this bull trend acceleration there might be an issue with it. Then as we move forward, we see a failure at the UP, so we price qualify, confirming the sell UP reversal. So now we're here and we've generated a signal, and the market gives you an opportunity to get in, and you are below the monthly CRX plus, and you're getting a sell UP reversal signal. Market has a big event, and it's breaking down, and you can see breaking down to the directional, but not only the directional, but this is also the monthly UP. So if it is going to stabilize, it's going to stabilize here, and that's why we have a sell DIR breakout strategy, because the directional can negate the sell UP reversal, and if it's going to, the market will stabilize above that level. So then we get a reaction, and you can see on the daily the CRX plus is containing this reaction. So this is working this negative structure. Everything that we go over, monitoring price action within market structure, and the price action is holding negative structure. It's telling you that this negative signal here that we had, the sell UP reversal, is still in command. Market would need to trade above here to negate that and put it in neutral, and then we get a failure. And we get this failure here, and the market is giving us a fresh sell signal below the directional, and we're also now failing below the monthly UP. And then we have our event break, and the market just takes off, goes right through everything all the way down to the DT3. In everything that we go over, we're looking at structure. If the market structure is not breaking, there's no reason to think to get out. And the market got you in early. It gave you a tell that this was true. More likely than not, you weren't able to add on to your opportunity, but you may have been able to add on here, and it held that metric, and then it just released and gave it all up. The market move is basically been played out. This whole hedge theme followed through, and even then, and obviously more. Traded down to the DT3. Huge event opportunity. What I've done here is I've added the monthly R level and the monthly minor levels, so we can see how everything all worked out here. I'm going to move things over just so we play through this event here, and we can see the market coming back, and it's coming back in within this pocket, this R level pocket. So we're in new territory. The hedge theme played out. We're going to kind of focus in on this monthly R level as well as today's, and look at this whole band. So this band is going to be key. Is the market going to stabilize above this band and keep this market out of the new event, or are we going to roll over? And so we can just see how price action works out. The market does come back up, makes a play for the monthly upside pivot. That's normal. The market breaks down through here, comes down, basically is testing this area, and then we're getting a retracement back up just in front of the monthly UP, and we can see the market trying to stabilize and really coiling around this structure. So you can see how the daily structure and monthly R level are kind of working together. Here's the monthly CR plus. We continue to move forward, and the market is kind of rotating, looking to make a decision, and all of a sudden we're getting a failure from the DT2 on the daily and back underneath the R level. So we had the big negative event, big negative reversal signal. The daily's pretty much played out, so we're looking at the monthly structure. And so that monthly structure, here's that flush, and then a retest into the UP zone, and now stabilizing them off that R level for the monthly, and now we're moving back under it. And if we get back underneath the CR minus, is going to be a negative signal. And now here's the monthly DP, and we're getting a failure from the monthly DP. We're starting to go off the chart on the daily. So the C minus, the downside target number 4, is 139.97, kind of the lower extreme. I've added in the full monthly price map grid. So here is the 140.40 CRX minus on the monthly. So the market's coming down, and you've got that confluence with the daily extreme at the DT4, and also the monthly CRX minus. So the price map's going to work the same, and you'd anticipate that to be a reaction after a DP failure. And so then we get one, and we actually get one back all the way back up to the R level. So they bounce from the 140 level all the way back up to 145.06, and they actually the daily R level comes back into play and actually contains it. And then you can see here how as the market's failing back through the DT2 on the daily and below the monthly R level, and then we get another kind of a retest. But we've kept this negative price structure, and we had the event, we had the reversal signal that got us into this negative theme. We attained our daily target. We had some volatility. We maintained this negative structure based off the monthly. We started to rotate lower, held below the R level on the daily. New failure below the monthly R level. Getting a failure from back below the DT2, we have another sharp event move down to the daily DT4. That produces a reaction back into this pocket of both the R levels with negative price structure, keeping us negative on this market. And then all of a sudden the market comes back down. We get a retest of the DT4. This is at the extreme on the daily, and we're taking that out. We're getting into new charted territory. So we really need to look at the monthly and we can see we have a failure from the DP on the monthly. What's that target? Target's at least 2 APMDs down to the 135.86 level. And the market attains that target. And we can see it's starting to work some of its other structure. It's below the DT2 on the monthly. It should continue to maintain this negative price structure, this emotional sell-off. We're just looking at price climbing, stair-stepping down the price map. So we're taking out, as we take out this level here, we'd anticipate that to continue. And we should stay below this DT2 level on the monthly, and the market does. Now we make a new step lower, so we've got some good definition on with the monthly price action and the monthly structure. The market should maintain a trade below here, and it doesn't. And so this is the tell that this aggressive selling is going to be at a pause, and then the market ends up trading sideways for the balance of the session. It's interesting that we come back to the DT4. I'm going to go blow this out a little bit, longer term chart. And we get more of sideways action into the close. Let's go even further out and just take a look at the whole day here. So we had the bull trend acceleration. The thing should take off. That's the first tell. When it doesn't, that's a tell that we're in that hedge theme. Looking at the bigger picture monthly structure as well, we had a lot going on there because we were getting a breakout above the monthly CRX plus. When that doesn't happen, we get a reversal and another reversal that's telling us we're in a hedge theme. Then we get the transition below the R level. That sets us up for a bigger opportunity. So on the daily and on the monthly, and then coming down with an event move, pull back into the pocket of the R levels, sets up another opportunity for a big break down to the second target, and then some on the monthly structure. Always keeping an eye on the bigger picture. That's what the daily price map does as well. The desktop application is giving you that macro structure for the session, so you're prepared. You know the conditions. You've got the structure, and then understanding on a monthly basis what is that bigger picture and where's all this happening. Again, it just provides more awareness, more clarity. For more information, please contact me at info@jsservices.com. Good luck.